So, we're going to talk about the power of a rules-based trading strategy and how it can help you become a more successful trader. Now, the first strength of a rules-based trading strategy is discipline and consistency. When you adhere to a set of predefined rules, you can avoid those impulsive decisions that are driven by our emotions like fear and greed. When you apply the same rules across different trades, that ensures a uniform approach, reduces inconsistencies that can arise from subjective decisions. Another strength, reduction of human error. So that rules-based strategy is going to provide you with some clear guidelines for your entry, your exit, your stop loss, your take profits. And that's going to eliminate any ambiguity and guesswork. When you stick to your rules, you get to minimize those emotional biases that we all have that often lead to poor decision making. So that rules-based strategy, it's also adaptable, it's flexible. You can adjust those rules or customize them to suit different markets or trading styles. Just allows for a more versatile approach. Now, another key strength is risk management. When you set these clear rules for risk management, like position sizing and your stop loss levels, traders can better control potential losses. So a rules-based approach is also going to allow for performance analysis and improvements. By tracking and analyzing the performance of your strategy, you get to identify areas for improvement and you get to continuously refine your rules. Finally, the rule-based strategy has that potential for automation. So you can code these into algorithms that's going to allow you to trade automated. So this can execute trades a bit more efficiently. There's no human intervention required. So we're talking about rules. Technical analysis plays a role in a rules-based strategy because it's going to provide you some insight into price patterns and trends that can tip the odds in your favor. So listen, we're going to look at a technical analysis approach because we do understand the importance of a rules-based approach to trading. So let's look into a specific strategy, and we're going to use pullbacks to a 50 EMA. Now, this can be a powerful tool, and you're looking to capitalize on trend continuations, even to the upside and the downside. So here's the rules. Very simple. Bullish trend, price breaks above the 50. Bearish trend, price breaks below the 50. Okay, now we know trend direction. We're going to wait for a pullback. So when we're in a bullish trend, we want to wait for price to pull back to an area around the 50 EMA. And in a bearish trend, we're looking for the same thing. Now we want to see at least 3 or more candlesticks closing lower or higher. So if we're looking for a pullback in an uptrend, we want to see 3 or more candlesticks closing with lower highs. Okay. Entry rules, pretty simple. Long position. We're going to enter a long position when the price touches or comes close to the 50 EMA and shows some signs of bouncing off of it. Tip, look to the left. You're probably going to see some sort of price structure. Shorts, the exact same way, that the price is going to rally to that area. Stop loss, just place it slightly below the 50 or the low of the pullback. That's for bullish. Shorts, obviously it's above the 50 or above the high of the pullback. Take profit. We're looking long. Take profits at a significant resistance level, or even look for a predetermined risk-reward ratio, like 3-to-1, even 2-to-1. All depends on you. You can even trail your stop. Now, for risk management, just determine the position size based on a fixed percentage of your capital, 0.5 or 1%. It's up to you. So now you have an understanding of this particular strategy. You got to regularly test it. Optimize your rules based on this strategy. Don't be jumping all over the place. When you test and you optimize your trading system, it's going to allow you to evaluate the performance of the strategy. You're going to see areas that you can improve on, and you get to adapt to changing market conditions. Here's a tip for you. When price is whipping around that 50 EMA, we're looking at a consolidation pattern, stand aside or go into breakout trading mode. So let's talk about automation because you can do that as well. So when you do implement a rules-based strategy, there is still some challenges, right? There's discipline, and you got to continuously monitor your results, of course. Now, automation has emerged as a pretty powerful tool in improving and enhancing rules-based strategies. When you take away human error and emotional decision-making, you can see that automation is going to increase the efficiency, the accuracy, and overall profitability. You need to remember, though, that rules-based strategy is not foolproof. You got to combine it with sound judgment. You got to continually improve your education on the markets. You got to make sure you include proper risk management. You got to test it. You got to optimize it, refine it, because markets do change. Go back to the same tip before. If price is whipping around the moving average, it's going long, short, stand aside from that instrument and look for another one. Anyways, very simple. Take a look at a rules-based approach, test it out, see if you can do that. Hit like, hit subscribe. We'll talk to you soon.